Welcome to Kristal Lens for July 20th, 2026. This week, the strongest AI earnings of the season landed, and the stocks fell anyway. Let's dig in. This week delivered a strange verdict. The AI complex posted some of its best fundamental news of the year, and investors sold it anyway. The Nasdaq 100 fell 4.13%, while the S&P 500 held up better at down 1.61%. Surgical selling in the tech that has led this cycle. IBM was the biggest shock, down around 25% on a light quarter. Meanwhile, the macro backdrop was calmer. June inflation came in cold, with headline CPI down 0.4%, giving the Fed room to stay patient. Netflix fell about 8% after third quarter guidance came in roughly $140 million. Light and full year growth was trimmed to 11.7%. Even with an inline quarter, a 33.4% operating margin, and a record buyback. United Health improved margins across its businesses and lifted full-year adjusted earnings guidance. TSMC posted revenue up 36% year-on-year and raised both its 2026 growth outlook and capital spending. ASML raised its 2026 revenue and margin midpoints, and IBM fell around 25% after pre-releasing a quarter about 4% below consensus. Here's our chart of the day, and it captures the market's central question this week. According to FactSet, the Magnificent Seven's year-on-year earnings growth premium over the other 493 companies in the S&P 500 is set to narrow sharply. It starts at roughly 45 points in the first quarter of 2026, then collapses into a slight deficit by the fourth quarter, when those other 493 companies are expected to grow faster. In a week when strong AI guidance still couldn't lift the tape, the answer the market appears to be circling is a broadening of earnings. So, what's next? All eyes turn to the week of July 20th to 24th, the heart of big tech reporting. This is where the market's own thesis gets tested, that earnings, not guidance, will decide the AI trade. Alphabet, Tesla, and ServiceNow headline a heavy calendar. With Alphabet, investors are focused on the 2027 capital spending outlook, cloud growth, and any read across from IBM's miss. Watch whether hyperscaler spending moves the bar higher for next year, and whether cloud-native software can decouple from the IBM narrative. Thanks for watching this update.